Hello everyone, I welcome you all to today's topic Decodified session. Today we are going to talk about crypto lending. We shall be covering this topic in the following sequence. First of all, why it is in news, then about the cryptocurrency itself before understanding what crypto lending is, followed by the prelims and means based practice questions for you all. But before that, I want you all to be informed about the Means 8 2022 program by Analyst IAS, wherein you can get help for polity, essay, public administration and ethics. Do check out the details given over here and apply soon to improve your scores in the mains examination and of course to avail the early bird discount. Now, why it is in news? So the major US cryptocurrency lending company Celsius network froze withdrawals and transfers citing extreme market conditions, sparking a sell-off across crypto markets. So people were actually selling off their crypto, and that's why an extreme condition came in. This particular stall also happens in the stock markets, wherein sudden sell-off or buying happens. So the exchange is stalled for some time and thereafter can be resumed. So this particular act has been done by Celsius Network, which is a US cryptocurrency lending company. Now let's understand about the crypto. What is cryptocurrency? Cryptocurrency is digital money created from code. The cryptocurrency economy is monitored by peer-to-peer internet protocol. Cryptocurrency is an encrypted string of data or a hash encoded to signify one unit of currency. Now, what are the examples of cryptocurrency? Bitcoin, Ethereum, XRP are all cryptocurrencies. Now, let's talk about Indian exposure to cryptocurrency. In 2009, first cryptocurrency, that is Bitcoin, was launched by Satoshi Nakamoto. In 2018, RBI banned banks and other regulated entities from supporting crypto transactions. In 2019, Interministerial Committee recommended banning all private cryptocurrencies. In 2020, Supreme Court struck down the ban on the trading of cryptocurrency as unconstitutional. 2021 Cryptocurrency and Regulation of Official Digital Currency Bill 2021 was introduced. Under this, a plan to ban private digital currencies favors RBI-backed currency. A 3 to 6 month exit period prior to banning the trading and mining and issuing of cryptos. Finally, cryptocurrencies, though unregulated, are not illegal anymore in India. So, few of the times in the previous slide, I have mentioned about RBI's digital currency. So, let's talk about RBI and digital currency. RBI exploring DLT, that is distributed ledger technology, which is based on central bank digital currency. Under DLT, details are recorded in multiple places at the same time. For example, blockchain is just one type of distributed ledger. Central bank digital currency, CBDC, will be a legal tender, which means you can buy goods and services using it, which you cannot do using crypto. It can be converted or exchanged at par cash. So you can even get cash in exchange of your digital currency, which will be backed by RBI. Now, to understand cryptocurrency further, we need to understand certain characteristics of the same. First of all, the anonymity. So cryptocurrencies make it possible to lend, sell, buy or borrow without an identity, credit score or even the existence of a bank is not required to conduct such business. It is highly secure as all records of its creation and when it's sent or received are stored in a sort of big digital book that anyone can access. Keeping it honest, it can't easily be stolen or seized and can be used anywhere in the world. Then it is cheaper to transfer as well. Some coins are used to transfer value measured in a currency like dollars, cheaper and faster than using credit or conventional means, meaning the cost to send someone crypto, which can be converted into regular currency, is cheaper than something like a check or a wire transfer. Illegal and highly volatile. However, crypto is not just used for illegal purposes. In fact, due chiefly to its price fluctuations and other reasons, it has fallen out of the favor on the black market. Issued by a central authority, and many governments are working to create a crypto coin version of its respective fiat currency itself. For example, Indian government, if it is working on creating a digital version of INR, then it is creating a digital version of its own fiat currency. Cryptocurrency is decentralized. So cryptocurrencies typically use decentralized control as opposed to the central bank digital currency. When a cryptocurrency is minted or created prior to the issuance or issued by a single issuer, it is considered centralized. When created with decentralized control, each cryptocurrency works through what is called distributed ledger technology, which is typically a blockchain that serves as a public financial transaction database. What is blockchain technology? Let's get to understand it more. A blockchain is a database that stores encrypted blocks of data, then chains them together to form a chronological single source of truth for the data. Digital assets are distributed instead of copied or transferred, creating an immutable record of an asset. The asset is decentralized, allowing full real-time access and transparency to the public. A transparent ledger of changes preserves integrity of the document, which creates trust in the asset. Blockchain's inherent security measures and public ledger make it a prime technology for almost every single sector. This is how a cryptocurrency based transaction goes on. Let's say someone bought a cryptocurrency, so a new transaction will be entered into the ledger. The transaction is then transmitted to a network of peer-to-peer computers scattered across the world. This network of computers then solve equations to confirm the validity of the transaction. Thereafter, once confirmed to be legitimate transaction, they are clustered together into blocks. These blocks are then chained together, creating a long history of all transactions that are permanent. And hence, transaction gets completed. Now what? So this is how a crypto lending operation functions. First, some people are going to invest money into crypto, and the crypto lending company will be lending this money invested by these buyers of crypto into cryptocurrency. Now if it is providing money, it would want some security or collateral. So it will ask this borrower to deposit his crypto assets, whatever cryptocurrencies he would be having, he can keep it with the crypto lending bank as collateral. Thereafter, he would be to get these collateral or crypto security back, he would be paying loan plus the interest, and even the crypto lending company would be paying the principal plus some interest, subtracting its own fee from the process to the investors ultimately. This is how lending of cryptocurrency goes on through a crypto lending bank or company. Now what is crypto lending? Let's articulate it better for our answers or wherever we have to mention about it. So here it goes. Crypto lending is essentially banking for the crypto world. Just as customers at traditional banks earn interest on their savings in dollars or pounds, crypto users that deposit their Bitcoin or Ether at crypto lenders also earn money, usually in cryptocurrency. Now, what are the benefits of crypto lending? While savings at traditional banks offer small returns due to historically low interest rates, crypto lenders offer much higher returns at a very top end, as much as 20%, though rates depend on the tokens being deposited. So otherwise the interest rate of bank would lie between 3 to 5%. But in the case of crypto lending, up to 20% interest you could earn on your cryptocurrency assets. So crypto lending has boomed over the past 2 years as decentralized finance or DeFi platform. These platforms are easier to access than banks. Moreover, they are also being promoted as financial services where lenders and borrowers can bypass the traditional financial firms that act as gatekeepers for loans or other products. Now, is there any risk involved in crypto lending? Crypto lenders aren't overseen by financial regulators. That means that customers who hold their crypto at the platform could lose access to their funds, as happened with Celsius recently. Crypto lenders also face other risks from volatility, in crypto markets that can hit the value of savings to tech failures and hacks. So this was about crypto lending, and we also made the news an opportunity to revise our concepts with respect to the cryptocurrency and blockchain. We also talked about RBI's digital currency and Indian exposure as far as crypto is concerned. Now let's look at the prelims practice question. With reference to blockchain technology, consider the following statements. Number 1, it is a public ledger that everyone can inspect but which no single user controls. Number 2, the structure and design of blockchain is such that all data in it are about cryptocurrency only. Number 3, applications that depend on basic features of blockchain can be developed without anybody's permission. You have to pick the correct option from the combinations given below. A, 1 only, B, 1 and 2 only, C, 2 only, and D, 1 and 3 only. Pick an alphabet as your answer and put it in the comment box below. Now let's look at the mains practice question. What is crypto lending? How does crypto lending further complicate the cryptocurrency paradigm? Discuss the measures that are needed to overcome the complications. You need to answer this particular question in 250 words. This is it for today. I shall see you again tomorrow. Till then, take care, stay tuned, and thank you so much for joining in.